Now let's talk about trading during a recession. This is where you're going to probably make a ton of money if, especially if the stock has come down or the market has come down significantly. And I like mainly trying to get good entries. This is where you're really getting your good entries for your 1 to 3 year leap options because everything is priced really, really good. This happened during COVID. So many millionaires made during COVID. Liberation Day, I made a ton of money because of this. But essentially, what I like doing is um, I like coming out and I like looking at um, essentially when these price spikes or when the VIX spikes, that just means that there's a lot of uncertainty in the market. And I like buying around the 30 VIX. So when the VIX hits $30, usually that's kind of my cue to like, okay, this is when I'm going to start adding to my positions. I'm going to take a leap option on this and I'm going to hold it. So this is really, really good um, because like you can see the past couple of years. Like if you bought literally anywhere at 30 and if it's even higher, it's a very good buy because the market's probably like terrible. Like everybody's probably losing money. The market's at the bottom. Everybody's scared. This is the best time to get in, the best time to get a leap because you're going to make a ton of money when it goes up, especially because the contracts are going to be priced so low. Something else is using the RSI. So usually I like allocating when the VIX is about 30. If the VIX hits 40, I'll allocate some more. If it hits 50, I'll start really allocating. And it's honestly, it's such a great indicator for when people are scared because like once the VIX hits 30, I'm like, okay, I'm gonna start allocating some money. So that's an indicator that I like using, especially during recessions. Just really good. It helps you with timing, I guess. Um, I like it for timing, but it also gives you like a good indicator of like, okay, I think this is good for me to start allocating a little bit here. The market's down a little bit. The VIX is 30. I'm gonna buy a contract that's like 2 3 years out, and more than likely it's gonna print. And something else is you'll also look on whatever stock you're trading, and you can look at the RSI. I like looking at the RSI and seeing, okay, it's clearly oversold. You know what I mean? Like the market has dropped significantly. This is super oversold. I'm gonna enter, and now I'm gonna print. Like essentially just have money on the sidelines for when the VIX hits 30, 40, and 50, because that's when you want to really start allocating the leaps because you're going to be holding these contracts for 1 to 3 years out. And, once you have your profit, take your profit, of course, but you're just really waiting for these deep discounts because that's when options are going to be so good for you in comparison to stocks because you know, so much more leverage, so much more upside potential. Um, so that's how I like trading during rough patches when everybody else is like struggling and complaining. I'm like, I hope it gets cheaper. I really do because I'm literally going to allocate into leaps and I'm going to hold them for 3 years and I'm not going to worry about day trading and I'm going to print when the market does go up. So, I think like the only time it really gets bad is if the market is terrible for like 2 3 years in a row. Then your leap options are obviously going to expire worthless unless you cut your losses. But even then, like leaps options in general compared to buying shares are so much cheaper that you can just keep buying them in the dip. Like the market overall is up and to the right. So if you just keep buying the dip, like that's literally what you do is buy the dip, right? People say that all the time, and like no joke, just buy the dip and keep buying the dip as the dip keeps dipping. Um, but the fact that you have a 3 year time horizon on some options, 2 years even, Like, it just gives you more time for the market to correct and go up and you to be right in general. The next thing is trading options around earnings. I don't like doing it because you're going to have a very hard time figuring out what theta is going to do, because there's a lot of like implied volatility goes up, um, and when it comes back down, you're kind of screwed because your contracts are going to be worth significantly less than what they were before. And this is all priced around earnings. So I wouldn't say do it. If you are going to do it, like, you need to know this stock like the back of your hand. You have to have a very, very good idea of it. And even if you tried to take advantage of the theta decay, like, you still don't know what stocks are going to do around earnings. So um, earnings are just super, super volatile. They can create big swings in just such a short period of time. And, you know, this does create opportunity, but there's just so many risks involved. So, um, as a beginner or an intermediate trader, I would completely stay away from it just until you like really have a fundamental understanding. I don't think I'll ever touch earnings on certain stocks. And if I do, like, I'm going in knowing it's just a gamble. Like, there's really no point. I'm just throwing away money if I'm doing it. So I don't recommend it for anybody. Just thought that that was important. Uh, just especially if you're trading options around earnings, like, even more so than stocks, you just be extremely careful. Trading on the go. So I'm sure you guys probably keep your phone everywhere with you. There's a couple apps I want to for sure recommend, and the first one's obviously Thinkorswim Mobile. So I'll link all of these down below, but I have Charles Schwab for investments, Thinkorswim for entering and exiting trades, Yahoo Finance for news, and then I can also see charts on there as well. I have TradingView for charts, and then one of the most cool apps is Option Strat, and this goes into like the super complex strategies. So like credit and debit spreads, broken butterflies and regular butterfly, like stuff that I didn't go over because it's not super important. The four main strategies you need to know are buying calls, buying puts, selling calls, and selling puts. And from there, you can essentially do any strategy you want. Um, but yeah, Option Strat, I'll link it down below. Super cool. The next thing is just making sure you're setting your alerts so that you know when you're like, say you're out having a good time, you're traveling, and price hits one of your price targets. Like, make sure you have your alert so you're like, oh, I can get into a trade here. This looks really good. This meets my criteria. I can set my entry, my exit, my stop loss, my take profit pretty quick from your phone. So the trading or the Thinkorswim app is pretty good for doing that. So that's trading on the go. I would really recommend that you guys do trade on a laptop because it's bigger. A phone is kind of hard to see, but those are a couple of the apps I would recommend if you are going to be trading on your phone. Congratulations, you made it through the course, and that already puts you ahead of most traders that quit before they even get started. Now that you kind of have a grasp on the market, you know how to set your risk tolerance, you know how to enter with position, and you know the different options trading strategies. Now it's time for you to actually start applying it. So the next step is to just join the Discord community, to be around other options traders, be around other traders, people doing things in general, and just to ask questions and learn as much as possible and to start applying it. Okay, this is where you start applying. You get that paper trading account, you start taking those trades, you start testing out different strategies, the ones that you like, the ones that you don't like, and just identifying your strategy and what works best for you. But definitely making sure that you're taking action, because watching videos over and over again, looking at different courses, that's not going to make you rich. Actually applying the information that you learn is what's going to make you money. So now it's time for you to actually go and do that, to open up that paper trading account, to go join that Discord, meet other traders, and to ask as many questions as possible while you are applying it at the same time. So I will see you in the community.